Hey everyone, this is Anna from hotoptionbabe.com. Good Monday morning to you. This is November 14th, 2011. Now, as many of you know, it's been a very bipolar and very tough market to trade. And I say this because I know some of the best people that have been, not as accurate as they normally are, and my October wasn't all that great, to be honest with you, but I'm hanging in there pretty much flat. But it's, just to stay flat has been tough with these wild swings and moves. Now I'm seeing one of three scenarios here, and I'm going to go over them real briefly, and then we'll look into the charts a little bit more. Number one possibility, we have a little bit of a corrective wave down to around 1230, 1228, okay, and then we melt up to the rest of the year to around 1320, 1350. So that would take us to about right here, okay, take us down about right here, if this thing will work, and then up to about 1320, maybe a little bit higher, okay. That's number one, and that's the one I'm leaning towards the most. The number two scenario would be that, and it's still on the table, is that and that would be a lower high, by the way. Now, you notice we closed below the 200-day moving average here, okay? We did close below the 200-day moving average. But the market looks like it's really trying to hold up here. So we can't discount the fact that there's a large bull flag on this thing, okay? Now, that being said, there was a large bear flag a while back. So you always got to have your probabilities and keep your mind open. All right, so let's look at possibility number two. Number two is that we come down, something's going to come out, I don't know, something will come down. Come out, and we come down to around 1190, 1150, and it's probably going to happen pretty fast, maybe in a day, and then melt up the rest of the year. And the third scenario, which is probably unlikely, is we come down, and then that would still make a lower high, by the way. We come down to around 980, which is very unlikely, but it's still on the table, but barely, and then rally up the end of the year. So those are sort of the three scenarios, and like I said, I'm leaning towards number one the most. Let me delete all these drawings, okay. The daily's turning back up. You can see that there's no real conviction here on the oscillator. And let me add this. I'm trying this new study, a relative strength index, and I'm going to use it along with MACD. Let me see, okay, relative strength. There we go. Okay, didn't have that go in there? Yeah, there it is. You can see we're pretty overbought up here. Now, anything over 70 is considered overbought. And we're right up here at 88, about 88% on the daily. So I do expect that wave down to come, all right? And that makes sense there. That makes sense there. And let me pull it up on a shorter time frame, and let's look at it. All right, there you go. And there's your, what's the two? That's the 200, I think. But anyway, this is your, sorry, I want to do the 60. Here's your 60 minute. Looks like it's bouncing off some of the down move we've had this overnight, but it looks like a bit of an inverted here. And again, your relative strength index is pointing down. Okay, so it could rebound or continue down here a little bit more. All right, let's go to the SPY, which is another one I like to look at. Now on the 60, it looks a little bit more bearish than the E-minis, but again, here's that inverted looking head and shoulder. We've held up here at pivot around 125.61, and let's see what the low, oh, well, I can't pull it up because it's not going to show me. We got a lot of a lot of support right here, right around here. So if it were to go down, the next level I would look for would be, let me get rid of those. Next level down would probably be around 124.69, and then 124.21, and even 119 area. Okay, that being said, take a look at gold. It's pretty much a given. Now, there is a head and shoulder here on gold, but the and the relative strength index is pointing down here, so we'll see if it holds its support level or breaks here and goes down to around 1720. The thing is, the holidays are notoriously bullish with very light volume, so if we have a wave down, it's probably going to be pretty swift. And this is options expiration week, so again, another bullish type scenario. But that being said, we'll see how it plays out. I hope you trade well, and I think if we have a major wave down, it probably won't be till the first quarter, the end of, like around the end of January, 1st of February, the way it looks like it's setting up. And that's notoriously a bearish month, the end of January as well. So trade well, use, I remember I told you in the video, I think it was last week, the way to play it was either, long, out of the money long put, not too far, and as a money long call. And you would have done well last week had you done that, because we had that big down day on Wednesday. You could have closed that and rode the long up the next 2 days, so that strangle would have worked out really, really well for you. If you're a long stock and you had puts on it, you would have been protected on Wednesday. And then when you saw it starting to push back up on the let me do the SPX. On the SPX, when you saw it starting to push back up, you pretty well knew that you could either. It's always good to keep yourself hedged, and but you could have maybe undone some of your hedging at that point. It just looks chart looks pretty bullish. The only thing I said is very overbought here on the RSI. And it failed to close above this 200-day moving average. So we'll have to keep our eyes on these charts and see how it turns out. And I'm playing sort of both sides of the fence. And there's your 1230. I actually think is one of that scenarios of your wave down that could possibly happen. So you guys have a great week. And any questions? info@hotoptionbabe.com. And you have a great one. Thanks. Bye.